In the past 2 trading days, I've had the single biggest profit days of my entire career. And I did this almost exclusively by following one repeatable daily strategy and really focusing on a few key simple things. And the best part about this isn't overcomplicated, and it's mostly to do with the specific thought process in combination with this trading model. Okay, so in this video, that's exactly what I'm going to be breaking down for you. First, I'm going to walk you through high probability conditions that I look for, so then when I show you the model, you'll be able to understand how it works and how I use it to find these daily opportunities. Then I'm going to show you the extra specific layers of confirmation that I look for to be able to be even more selective about the trades that I do take while avoiding taking bad trades, allowing me to maximize my profits. Then I'm going to walk you through live examples of me using this model and how I execute it in real time. Then I'm going to go over the extra specific confirmations that I use to be even more selective, increase my win rate, and extract the maximum amount of profit. Okay, and I'm going to do my best to show how consistent and repeatable this strategy is so that hopefully you can learn from it, apply it to your own trading, and improve. Okay, so like I was saying, in 2 single trading days, I've had some of the best results that I've had in my career, which has allowed me to increase my risk per trade. Considering these 2 days were considerably good, my win rate actually increased by 10%, and I was able to have a really good results. And I think one of the most important things to sort of start out with is that I'm not perfect, I'm not right, I don't have a crystal ball to predict the market. So you can see I had a $1,400 loss, $1,200 loss, $1,300, $1,200, $13, $1,100. I was wrong nearly half the time, and usually I'm wrong more than half the time. Okay, but the goal is to be able to filter out these ideas, refine them down with data so that when you are actually entering the market, when you're right, you're really letting them run, and when you're wrong, you're just getting out, taking the paper cut, and moving on to the next. The goal is to not be right every single time. Like I said, my win rate is typically around 40% using this type of model. Okay, so I want to explain to you the foundations of this whole process that I've sort of figured out. And it basically comes down to 3 simple steps, which you're going to see a ton of examples of. And I'm basically just going to try my best to speak with you like I'm speaking one-on-one in person and really show you how I've been able to have these breakthroughs. The first most important element I would say to trading in general is finding a way to identify high probability conditions for you to enter trades in the first place. There's a lot of chop in the markets. There's random stuff that's happening all the time. You need to be the person to be able to put a filter and put constraints on that so that you're not just taking ideas randomly and allowing yourself to go haywire. It's tempting. There's a lot of movement. There's a lot of excitement. There's a lot of opportunity, but you have to be able to boil yourself down to making sure that generally speaking, you're getting in on those high conviction areas. Okay, so I'm going to go over those conditions here in a second. Okay, the second really important thing is to make it systematic, make it repeatable by following rules. Okay, just like anything else, if you can't be repeatable, yeah, maybe you'll have some good ones, you'll get lucky, you'll make big trades, but the whole point of this is to be able to make it so that it's on a repeatable process so you can do this consistently over time. You're not just having these random spurts of luck and then blowing it all away. All right, and so once I identify this model, I'm also going to show you a lot of examples of how it kind of looks in real life, because in theory it's one thing and then doing it in real time is another. So through these repetitions, it's going to help a lot as far as actual implementation and understanding the thought process that goes into it in real life application. And then the last thing is being able to take this model, be able to filter and refine down even further with something that we call confluences. And confluences are basically extra layers of confirmation to be able to confirm or deny your idea and make sure that you're taking the most quality setups. So consider it like a filter. When I say confluences, that's going to be a quality filter. So yes, we're being a little bit more selective on the trades, but the ones that we do take are A+ setups that are going to allow us to really let the market run, maximize profits, and increase selectiveness. Okay, so first I'm going to go over each element of these high probability conditions. Then I'm going to go over examples right on chart of all these models coming together and how it plays out. So high probability condition 1 for this model is primarily focused around finding good areas of price action to enter into. So one of the primary things that I'm looking for is something called a fair value gap. Okay, you might be familiar with this concept if you're already trading, but really quickly, a fair value gap is described by a sequence of 3 candles. If price is generally moving in one direction, that's a bullish fair value gap. If it's generally moving in an opposite direction, it's a bearish fair value gap. There's also inverse fair value gaps, all this other stuff. Okay, but in simple terms, it's when you have these 1, 2, 3 candles in a row, and the first candle's wick doesn't overlap with the third candle's wick. And these are typically big, actionable candles that are showing a decisive change in direction. And same thing for the downside. Generally, price moving down, 1, 2, 3 bearish candles. The wick of the first candle doesn't overlap. It should actually be this one. Either way, okay, I drew the drawing wrong. But the first candle doesn't overlap with the third candle. So you got your fair value gap here. Damn, don't at me. Okay, and you're going to see not only evidence, but why these areas are really, really important here in a second. Okay, so the next high probability condition that I'm looking for is something called a change of character. And this is a way of identifying how trends operate, and this is really, really important. Let's take this for an example. In order to determine that we have a downtrend, we need a lower low, a lower high, a lower low, a lower high, and then a what's called break of structure, which is basically happens anytime price is creating a new close underneath one of these new lows. Okay, so this is a break of structure, but if we have lower high, lower high, lower high, and now all of a sudden we have a new higher high, we're identifying this and calling this a change of character. Again, the same is true with an uptrend if it's starting to break to the downside. Higher high, higher low, higher high, higher low. These are our break of structures. And then once we have a lower low that breaks underneath this previous level, we have our change of character. This is really going to allow us to see areas where we could potentially be at the very beginning of a new trend. Okay, and getting into high probability condition number 3, this is one of the most important, I would say, pieces of analysis that I can share with you from 8 years of trading experience that oftentimes I get a lot of negative response off of because people think that support and resistance don't work. Okay, that actually weirdly enough usually gets contended a lot, but I'll let you determine for yourself and I'll show you this working in real time. Are trend breaks with what I call overside underside retests. Okay, and that's basically when, once again, we have a trend formation where we have these levels responding off of the same zone. We finally have a decisive push through that level, not always creating a change of character, but sometimes, and then taking that same exact level that previously couldn't be broken after a decisive change with price now testing the opposite side of it. Now, this is quite literally one of the most important trading things that you use in conjunction with a back-tested strategy, with a system, and you know how to actually execute all of this like a business structure can send your trading into the stratosphere. This is largely what we focus on the private side of our trading team. It's not only all the analysis, but really how to bake it into a business model. This is one of the most important things that's contributed to all the success that we're seeing right now. Okay, so very important point to remember. You're going to see more examples of this in a second. But right now, let's hop into TradingView, and I'm going to outline exactly how to set everything up and then go over how to actually apply this model on chart. Okay, so we have TradingView pulled up here, and then we have all of the conditions of this model pulled up as well. Now, in order to set my chart up, I'm adding a whole bunch of things. Mostly what I'm using is this indicator, which when I toggle on, you'll see shows me my change of character and my break of structure levels. Obviously, I know how to identify them, but I like to have them very faintly on the chart just to really make it clear to me. It's like one less thing to think about. It kind of reminds you that the structure is there. The next thing that I'm going to be adding is for the fair value gaps. Okay, you'll see as soon as I toggle this on, now it's actually showing me right on chart where these gaps in candles are actually appearing automatically on the chart. The third thing that I'm adding is something that we designed called the foundation indicator. Okay, it also has these fair value gaps that you can toggle on and off. It has a bunch of customization, but what I'm using this for is to basically be able to see where the New York stock market pre-session is opening and then where the actual opening bell is, which typically drives a ton of market movement at that point. So we want to be able to be aware of it and also use it for trading opportunities. So I like to see this gray zone and then this dotted line to be able to identify when that's going to start. All right, so now that we have everything pulled up on our chart, let's take a look at an example of what I'm really looking for to find an entry with this model. So obviously we have some fair value gaps, and you can see these midpoint areas are really getting moved into and then have moves off them. You can see it happening here, happening here. So if you're able to identify a trend, these can be really, really good entry areas in conjunction with other things. But once we find a fair value gap, what I'm looking for is a really actionable change of character and then a trend break. And like I said, I'm going to talk about the confluences a little bit later. I want to simply go over this model first. Okay, so what I'm now going to do is basically use my trend tool to identify where the general movement of the trend is to see when we're going to break into that new area. All right, and then you can see as I bring price forward, even though I have my fair value gap here, we still haven't broken out of this whole entire structure and created that change of character. So yes, price comes right back into the middle of this before breaking out of this trend. As tempting as it is to start tweaking things, especially in the beginning, you really want to find when these rules are specifically following. And you'll see now we have an official break of that trend level and a change of character. So now this is an ideal condition for me to be able to want to target the midpoint of this fair value gap and sort of position my stop loss so that if price is to retest this trend, I won't get stopped out of the trade before potentially having a bounce in a continuation. Okay, so now I go ahead and play this forward. Now price is starting to get a big push in price action. So what I'm doing, that I'm looking at previous levels that are important to determine whether this is an actionable fair value gap. All right, you can see this same level was tested as support, support, big push down, support, resistance, resistance. And now price is starting to push above back into this specific area. So we have change of character, fair value gap. We just broke outside of this trend level. So now this is going to be a hot spot area to be able to now get support on into a fair value gap after a change of character, after this trend level was retested. Now it's ideal 100% if this, for example, this one was filled, but considering we got a massive push in price action, realistically, we could probably take both of these. But if we're right about either one of those, and this changes trend direction for the rest of the session, even if we take both of them, say we lose one and then we lose here's one. That's 2 contained losses, but you'll see price responds really well off of that area. We now have a break of structure in this trend level. You can see this specific point allowed us to put ourselves in a high probability condition and then use our other levels of filtration to be able to enter into positions, allow the market to move aggressively in our direction. You could see even at this point, now it's 4.6x what we were risking by being able to identify that critical point. Okay, so this is me actually taking this trade in real time. So I'm going to show you sort of the execution that I'm using. So you'll see, number one, I have my trend identified. Number two, you can see I have my criteria for my change of character. I've identified this area of importance. That's exactly where I'm positioning my entry level. Okay, and you can see price comes back in to that specific area. My entry gets tagged perfectly. It immediately flips. I'm up $700, $800. That's where price starts to really take off. Price is continuing to move in my direction. Okay, at this point, I'm doing something called risk reduction. I'm taking my initial risk level and I'm following it into this big move, which basically prevents me from even being able to lose money. And it's basically a risk-free trade. I'm just playing into this level of momentum. Okay, the trade continues to play out. Now I'm up almost $5,000. Okay, and into this strength, that's where I take my position off. Okay, so now from this point, I can be wrong 5 other times and still be at a break-even point, which for me is taking a lot of pressure off being right or wrong, knowing that eventually one of these opportunities, as long as I'm managing it right, is going to play out in a big way in my direction. Then it becomes a game of just keeping your risk contained, reducing risk when you get a movement in your direction, and then letting the trades run. Okay, and don't forget, I can be even more selective when I start using the confluences that I'm going to share with you in just a second. Okay, so let's take a look at another example, but this time in the opposite direction. Okay, so you can see we have our 930 open. Market is trending down in this direction. Realistically, what I'm looking for is not only these fair value gaps in these change of characters, which yes, can open up these opportunities. You see change of character here. What I'm really looking for is to follow the trend and also have one of those overside, underside retests. You can see price is generally moving down here, but responded off of this level, and then finally we have a push in price action here. And then notice we have a big decisive candle that finally breaks underneath this low level. Look at this area, this area, this area. That's the exact high of this very thin but important area on the chart. So we have change of character here, risk put up over this candle, price comes back in, rejects off of that area. Now we're getting a confirmation underneath that level, and we're now in a continuation of this downtrend at the very lowest point. So if this is our downtrend, theoretically, unless this reverses and creates a change of character to the upside, we're in at the very low of this first pullback in the trend. That's sort of the idea of what we're trying to do, is get in early on these trends and let them play out. Then I'm trend following this down. And there's a few ways that I like to manage positions once I'm in them. All the times I'm just doing what makes common sense, which is trend following these, then walking my stop loss down on these swings. But realistically, I'm sort of just trend following these down, and then when it shows indications of reversals, I'll tend to exit the position. So let's take a look at this trade in real time. So you can see I have this important area. See, I'm marking out the center point of my fair value gap. Okay, you can see price comes in and tags my entry. Okay, so we have a change of character, underside retest, price starts to melt off from that exact point. Once again, this is really one of the most important things that I'm looking for. So now we have a lower low, a lower high, and a lower low. Now we're starting to develop a downtrend. We're up 2,600. You can see I'm starting to trend follow this. I'm walking my stop loss down on these swings. I'm also using something called multi-time frame analysis on this specific example. This is getting a little bit more advanced. I'm not going to go too deep into it, but I'm doing analysis on a more zoomed out perspective of Bitcoin and also on Solana to time my exact exit point. Okay, you can see I'm targeting this area here. So I set my take profit to that level. And once that area was hit, I went ahead and took the trade off. Okay, and you can see that was the exact area that was hit on that midpoint that I was targeting. Okay, so there's a bunch of ways to manage the trades, but the biggest point is to be able to get in early on those trends. And you can see those confluences working really nicely. Let's take a look at another example here. So the trend moving down, change of character, fair value gap being left behind here, as well as this support level. There was resistance, 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 broke it with my fair value gap candle into a change of character to retest it on the overside. Okay, so you can see I enter my position here, kind of pushes down a little bit, gets support, and then immediately rejects off of that level. Okay, so that's my fair value gap, came right into the middle of it. I got in a little bit late on this trade. It happens quick. Get the break of structure to the upside. We're getting a push in our direction. I'm taking profit along the way here to sort of take risk off the table. So even if it does reverse, still have profit locked in. And in order to allow these big trades to really run, you do have to allow for a lot of movement in price, which you can see we get a pull down here. Okay, then get a really big candle to push up. They're up 2K with about 700 locked in. Then you can see I see a change of character to the downside. You can see I drew that area because I knew it was probably going to be a problem. Then price comes down and stops me out in the money. So I was able to lock in a small amount of profit, but still one of the biggest things for me is I was still allowing this trade to potentially run. If this wanted to continue to move up parabolically for the day, I could have made 7, 10x what I was risking on the position, just entering into that critical area. Let's take a look at another example. We get a trend break, change of character with the fair value gap that's really, really important. It broke this really well-established trend. You can see well-established trend, change of character, fair value gap produced here off of of this support level, which I drew. Price comes back into it. So I set myself up, immediately get that response. See, I was also targeting that support level on a larger time frame. I'm using a bunch of things. I'm not going to get into all of those in this video. Okay, but if you like this type of stuff, make sure you subscribe, hit the like button if you're still here and enjoying. So we get an immediate rejection off of this area. You can see what I'm waiting for is this high to be broken to confirm that uptrend. So I can go ahead and reduce risk. I'm already up 2K. Okay, so you can see I bring my stop loss to break even, lock in 1200. We're floating 15. And now I'm basically just trend following this all the way back up. You can see we get response off of there. I'm walking my stop loss up, continuing to move up. And that's where we take the trade off. And I'm able to make $3,300, taking the risk off really, really quickly, targeting that exact specific point that we knew we wanted. Once again, just nothing crazy, just focusing on these core principles. So now that we understand the foundational model of this, I want to talk about two added layers of Confluence that I use basically across the board in all of my trading that can even further allow us to be selective on the ones that we are taking. So one of the two biggest Confluence filters that I'm going to be using is something called Elliott Wave Trend Analysis, which can basically allow me to not only be responsive off of these levels, but anticipate where the overall trend is likely to reverse, so I can capture some of the largest moves possible. And then also using something called Fibonacci zones, statistically have allowed me to be a lot more selective about the areas that I am targeting. I'm not using these independent, but these are extra layers, like I said, that are going to allow me to filter even further. Okay, so here's the way this works. I have a real trend down here, and then I have an Elliott Wave description up here. The long and short of Elliott Wave is basically the study that shows us that trends develop in 5 wave structures, followed by an ABC corrective structure. These up moves are called impulses. These down moves are called correctives. So you can see we have 1, 2, 3, 4, 5, followed by ABC. Okay, now there's rules that I can follow to be able to determine what is Elliott Wave and what is not. If you want to learn more about that, I'll put a card at the end of this video where I show you this in way more detail and you can fully lock in on it. You'll still be able to understand and get value out of what I'm going to share with you here. So basically what I'm looking to do is try to identify by using these other waves where the top of my 5 could be so I can play into these reversals and literally snipe even better entries. And this is going to fall into all of the trading models that we use on our private team. Everything can be applied with this general analysis that I'm sharing with you. This is going to include two things that I like to use, which is a trend-based fib extension and then a regular Fibonacci retracement. Now, if you're familiar with Fibonacci, this is a tool that's going to show us retracement levels starting with 23.6 and ending in 78.6 with the most important, what's called golden ratio at 61.8, which you can see in green here. So a lot of times when you get pushes up in trends and then they have pullbacks, this is going to be a key area that if you get a response off of will lead to a continuation in price. So we can start to actually be a little bit more selective on areas in the chart that we're getting in on if it's matching up with that Fibonacci zone. Additionally, if we take that golden ratio number and use something called a trend-based fib extension, now I can actually take the distance between this wave and one and look at that golden ratio's multiples off of this distance to be able to see where 3 ends up and ultimately be able to time the exact high of 5. And we can use this to play into massive reversals. Okay, so let's take a look at this on the actual chart now, right? We have the beginning of our trend down here with our first push up to 1, down to 2, 3, 4, and then 5. As you can see, if I take my Fibonacci from here up to here, that 61.8 area is exactly where wave 1 came to, just to show you how Fibonacci tends to work like that. Then if I take this trend-based fib extension, I click here, up to here, back down, creating my factor of 1. And like I said, basically measuring the distance from here to here and then looking at those golden ratios, you can see not only did the high of 3 hit off of 161.8, then we also had a response in rejection, a little bit of a poke through of wave 5 at this 261.8 before having a big push down and a break of this overall structure. And you'll notice there was a fair value gap left behind here. So if I'm tracking this overall trend, you can see I have this level, this level, this level making contact. And if I drag this up, this is the exact area that price wanted to run into at the same time, matching up to this fair value gap. At the same time, if I take my fib from this point to this point, you'll see that was the exact level with exception to a little bit of push up that price came all the way back up to before eventually having an entire reversal down to this exact area between 1 and 4, which is where this A, B, C correction is anticipated to end. If I can start adding all of this to my chart basically every single time, I can filter through all of these ideas and really be able to pick perfect areas to be able to enter the market into, and then once again, take trades down to be able to make 7, 8, 10 times what I'm risking on the trade by having this level of analytical understanding. Once again, this is not in hindsight. So you'll see I have the exact trend line drawn. I have exactly my Elliott wave. I have my fair value gap in here. And you can see in real time, I had my order in. I was barely just fast enough. So I wanted to target into this area, which would have been a massive trade. Okay, but then once I have a secondary fair value gap and see that we got all of the responses, change of character, break in direction, that's where I set up my position. Price comes up perfectly to tag that area. That's where price starts to break down and form the the rest of that wave structure. You can see if I was in up here, it would have been an even better position, obviously. So I lock in partials. I'm letting the rest of this position trail. Price comes down to that 61.8 area, has a big push down, and into strength, I take the position off. You can see into this area, and that's where price starts to make a reversal. Okay, and you'll see in addition to this, I can toggle on this custom indicator that we have. It's basically going to show us where continuations are likely to happen. And then it literally forms specific shapes to show me high potential areas that fit all of my other criteria that I can't talk about on YouTube in order to be fair to our private team, that are telling me where there's high probability areas to enter and then to be able to play these positions. Now, it's not obviously not a crystal ball. You can't just rely on indicators, but to have a tool that's going to show us all of our confluences is extremely helpful. Okay, and being able to actually treat this like a business, you can see lots of funded traders, which is amazing to see. Really, really juicy trades. Okay, with a lot of those things that I can't necessarily share directly on YouTube to make this even more like a business. And I always really want to show value on YouTube to be able to show you what's possible if you lock in and you understand skills like this. If you want to learn more detailed analysis, you can watch this video. Check out our team right here. Okay, like and subscribe if you enjoyed and you want to know when videos come out. But until next time, I'll see you all in the next video.